Hello guys, this is Oba FX. Welcome to my channel. Um, it's really been a while and I really want to apologize to all my subscribers for not having been able to post for some time now. But the good news is that I'm back and this month and I'm going to be doing a lot in the sense that I've decided to be posting videos on analysis of synthetic indices. Of course, you know that that's what we basically deal with on this channel. Not like we don't trade other things, but we deal basically on synthetic indices, precisely derive synthetic indices. And today I'm going to try to do like an analysis for the crash and boom pairs. Now, a lot of people find it difficult to trade these pairs. And I also sort of have like an affinity to these pairs because they were the actual pairs I started out my trading journey with. So we're going to dive into it. So basically, when I do my analysis on these pairs, I use what I call the top-down analysis. The top-down analysis. Now, what does the top-down analysis entail? Top-down analysis simply means the use of price action. Price action, using price action simply means that you are using the past behavior of price in combination with what you are seeing presently to predict what would what price is likely or probably going to do in the future. So, like I said, we're going to be looking at the crash and boom pairs. Crash and boom pairs used to be just boom 500, crash 500, crash 1000, and boom 1000. But almost recently, the Reef decided to add other pairs like I think we now have boom 300, crash 300, boom 600, crash 600, boom 900, and crash 900. But today, as time would permit us, we're going to be looking into the basic ones, which are the crash 1000, boom 1000, crash 500, and boom 500. So we're going to be starting quickly with the boom 1000. So when you hear boom 1000, it simply means that this pair does something. It moves downwards and bumps upward, hence the term boom 1000. So I'll take that again. It moves gradually downwards but bumps forward. In other words, boom 1000, after every 1000 tick, is expected to shoot upwards. So what I'm trying to say is these red candles now indicating downward movement simply means that this movement downwards is usually gradual, while the movement upwards is usually rapid. And this is the major reason why a lot of people find it difficult to trade these pairs, boom and crash. The crash does the exact opposite of boom. But having that on the back of our minds, it still doesn't mean that you can't trade these pairs or analyze these pairs using your regular top-down analysis. Like I said, the strategy is basically price action. Anything that has a price can be analyzed. Anything that has a price and there's a time frame, you can always relate the time to the price and you should be able to predict what the market would or likely do. So having said that, let's dive into the analysis proper. So here we have boom 1000. So for top-down analysis, time frame is usually key. So what I do, I try as much as possible, first of all, to get the direction of the market. So to do that, we just entered a new month now. So I'll go to the monthly time frame. And just by merely looking at the monthly time frame, you can see that boom 1000 is in a massive uptrend So what this tells me is that boom 1000 is bullish. So having this on the back of my mind, what is helping me to do is that I will know that I'm going to be basically looking for buy opportunities. So anything that has to do with a sell, my confluences have to be massive for me to decide to say, okay, I'm going to sell this pair. So just by merely looking at this. So most times I can get my direction from either the monthly time frame, or if the monthly time frame is not that clear, I can check the weekly time frame. But now even the weekly and the monthly time frame, they are showing me the same thing, that this this particular index is in a massive uptrend. So now we know that our market direction is what is uptrend. So after determining the direction of my market, I have to look at the structure of the market. Now, some people will say, does the structure of the market not mean the direction of the market? Yeah, to an extent, but there are several structures in the market that you can trade. So in this case, I have to look for the structure of the market, of what the structure of the market, in the sense that what structure is the market price forming at this particular time. Because once I'm able to determine that, then I will now be able to determine my key points of interest. So we've talked about the direction of the market. We say after that, we have to try and determine the structure which the market is posing. Now, looking at this, in an uptrend, the market will give a simple structure of higher highs and higher lows. So we can see that this is a high, this is a high. The market moves and forms a higher high, comes down to give a higher low, shoots up to give another high, retraces back to give us a higher low, comes up again to give a higher high. Now it gave us a higher low, and now it has come up to create another high. So we can see here that just by merely looking at the structure of this market, to make it clearer, we can go to the line chart. So we can see that the market is currently retracing downwards. But to know the structure that I'll be dealing with, I'll be looking at this W. And when you are trading W structures, we're made to understand that once the market retraces back to the middle of the W, then it is expected to go upwards again. Let's go back to the candles. So now, if this gave us the W, that means our key point of interest would be the middle of the W. So if I go back to the line chart, there are two major points that I wouldn't joke with. First is this middle part of the W, and second will be this lower point. Now, why are these points important? It's because this price is expected to, or can be predicted, price is expected to retrace into this point and then continue upwards, or it can break this point, get to this other part below, and then go back upwards. So to separate this structure now, let's see if we can make it clearer by looking at the daily time frame. So you can see now that our key point of interest now becomes clearer. Now, how does it become clearer? We now have like a support zone underneath. So we can take this one out because this is what we are currently dealing with. So if I'm to zoom this in, I can include my trend line here to constantly remind me that we're dealing with an uptrend, and then my current key point of interest is this support zone. So we've done a few things here. We've looked at the direction of the market from the monthly time frame, supported by the weekly time frame, from where we tried to look for the structure that we'll be trading. Now, if you look at this now, you can see that we still have the W here. This came here, this went up, and then now there's a retracement into this part. So we're expecting that from this retracement, the market should go back upwards. So this is what I've simply done. In the rule of trading W, you have something like this. You expect the market to come back downwards to either this point or break the point to form like a triple bottom before going upwards. So if in any case the market keeps going downwards and breaks this bottom, then the trend of the market would have changed. So let me take this out. So if the market takes out this point, it hasn't entered a downtrend. But if it should take out this part, then comes down, makes a retracement, then it can continue downwards. So that means we're still clearly in an uptrend, and the structure we're looking at is this W structure, and the market has retraced into this part, but it's still firmly held by the trend line. So that means the price has already gotten into our key point of interest. So this means we have to pay a lot of attention to whatever is going on here to know if we'll be taking a trade or not. So having seen that the W structure that we saw initially in the weekly time frame is being supported by what we are seeing in the daily time frame, we can now go to our entry time frame. Now, most times for swing traders, your entry time frame is the H4, or maybe you refine it in H1. But there are other people that like trading in the lower time frame. Maybe you're a day trader or you're a scalper. I'll try to look into that. But basically, the way I take my trade, I start my analysis from the monthly time frame to get direction, the weekly or daily time frame to get the market structure, and then the H4 or H1 time frame to take an entry. So how do we take this entry? We look out for a few things. First, we look out for maybe the chart pattern. We look out for chart pattern and then candlestick pattern. Now, I'll be doing videos on some of these things as time goes on, especially for those of us who are not conversant with some of these terms that I am using. So, because like I said, this is just like an analysis of these indices for us to see that the same way people analyze the forex market or stock markets or even cryptocurrency, you can do the same for these synthetic indices. So now we can see that the price of the market has gotten to our key point of interest. And I said I will look out for things like chart pattern, candlestick pattern, trend line break for us to take our trades. So now we're in H4. So what do I do? We said that the market is in an uptrend, but currently we can still see that the market is coming downwards with a sea of red candles, because we mentioned earlier that the market is currently retracing, and it has just retraced into our key point of interest. Now, even if it had broken these support, it doesn't now mean that the market is in a downtrend, because but those who trade in the who use the lower, who trade in the lower, mainly in the lower time frame, at this point they will be probably selling. They'll be probably selling, but the market is still yet to break this trend line and go into a downtrend. So if I were to jump into this market, there's one thing I would do. I'll have to put like a counter trend line. A counter trend line simply means a trend line in the opposite direction of the original trend. So in this case, our original trend is an uptrend. So our original trend is bullish. So a counter trend line would be bearish because the market in the lower time frame is currently bearish. So how do I do that? I'll take this and put like a trend line here. So what am I looking to happen to this trend line? It means that I will only jump into this market to buy, because the market is in an uptrend, only if or when this trend line, this counter trend line is broken. So to make this clearer, I can go to the H1 to refine the, the trend line that I had drawn. So we can see that it is still in a downtrend. It is still in a downtrend. So we'll only enter this trade if this happens. If this happens, we can see that there's a rejection here already and the market is stalling, the momentum is reducing. So once this trend line breaks and then there's a retracement, then we'll take our entry and then our stop loss would now be beneath this place or just beneath this place. So for the boom pair, you can monitor it this week and see what happens. So once it breaks this trend line, you can enter immediately it breaks the trend line, or you wait for a retracement to be safe and then you hop in. So that would be our analysis or outlook for the boom 1000. Boom 1000. So for those people that will say, oh, but I take my my structure from the lower time frame. So let's just quickly look at something. Let me clear this. Now, even though I don't advise people to always trade in the lower time frame, the reason is most of the structures that you see in the lower time frame, they fluctuate a lot in the sense that your support in H1 would likely break easily as compared to your support drawn from the daily or monthly or weekly time frame. So the same applies to your resistance. Your resistance can be easily broken in the lower time frame. So if you are to trade based on that, you could end up losing money because the market can easily reverse against a particular support or resistance or trend line that you must have put in place. So for someone that would say, but I trade in the lower time frame alone, let's see what would have happened if I were to start this analysis from the lower time frame. Now, let's say this is H4. Now, if this is what I have before me, I can say the market was in a higher high, higher low, higher high, higher low. Let's do this. So the market was in a higher high, higher low, higher high, higher low, higher high, double low. It came back and made a double top and ranged for a while within this place, then market broke this level, formed a lower low, came back, another double top, and then came downward. So what I'm trying to say is that currently, if I were to start my analysis from H4, so I would have seen it already that the market is in a downtrend. But the only problem with this is you wouldn't know that in a bigger time frame, the market is actually trending upwards. And if you were to sell, the market is even at a key point in the higher time frame and would be going upward soon. Look at this candle. Look at this huge weekly candle. That means the market has been going downwards for a very long time. But in the H4, it will look as though the market just started coming downwards not quite long. So back to H4, if we were to analyze this using this lower time frame, I would have simply come here and said that the market made a low, a lower high, a lower low, and then it has moved upwards and currently coming downwards. So if I'm to do this, so I have like a W trying to form. So this would now become like my key point of interest. Why is this my key point of interest? The market was rejected from this support, went upwards, came back to the same support, went upwards, came back to this support, went upwards, then broke the support. The support now suddenly became what? Resistance. Now that the support is resistance, so that means, remember, in this lower time frame, we said the market is trending downwards. The market is trending downwards. So the trend line also that we've drawn is another confluence. So we now have that the market is at a resistance trending downwards. We can see that it's even it even left a point where the trend line coincided with the resistance zone. So now this would now be our focus. So let's go to H1. So if I'm starting my analysis from H4, then I'm like, I'll have to, my entry will have to be either M30 or M15. So for H1, we can see that it's still the same thing. There isn't much difference. So I go to M30. So if I had cut this trade early, all I would have simply done, it's still not that late, just that your stop loss will be bigger. So put a counter trend line. Place a counter trend line. Now, immediately this trend line broke, I would have jumped into this trade here, and my stop loss would have been here. My stop loss would have been here, and then my stop loss would have been here, and then I would have taken the trade from here. First take profit would have been here. So if we go to the 15-minute time frame, we see that it's basically the same thing. So if the only way you can still hop into this trade now would be if there is like a big jump upwards back into the zone, and then you can just hop in so that your stop loss wouldn't be too big. So that would be that for boom 1000. So let's look at crash 1000. Let me take these out. So just like I said, for the top-down analysis, we start from the monthly time frame, and just looking at it, you can see that crash 1000 is in a massive downtrend. So just like I said for the boom, crash moves upwards but crashes downwards. So while boom moves downward but bumps upward. So just they are opposites of each other. So now we've seen that from the monthly time frame that this is in a downtrend. So our next focus would be at the current place where price is, what structure is being formed that we can work with. So to try and see if we can make this clearer, there are two ways. First, we check this, the line charts. We can't really see much, but maybe this will be clearer when we look at the weekly time frame. Now, from the weekly time frame, I can already see that I can have a support or resistance zone here. So in this case, we're looking at a resistance zone because the market is currently retracing upwards. So if I put this here, I can see that I have a structure. Now, this is a structure that I have. Let's do this. This is a structure that we have. We have this currently coming upwards. So in trading this structure, the rule is that the market has made a high. This is a lower high, or rather, sorry, a lower low, and then it's coming back. So this is structure we're dealing with. And the rule is that if the market, we expect that when the price gets back to this point, it ought to what? Continue in its downward direction. Or if it doesn't start coming back down here, it can move upwards up to this point to form what? A double top before it continues in its downward direction. So until market price completely and convincingly takes out this particular top, then the market is still what? In a downtrend. So now from the weekly time frame, we've seen the market structure that we're working with. Remember, from the monthly time frame, we're able to get the market direction. And because the structure wasn't so clear in the monthly time frame, we came to the weekly time frame and we saw the structure that we'll be working with. And as a result, we'll be able to follow the rules that applies to this structure. And even looking at it, you can see that the market even tried to form like a chart pattern where this is like a shoulder, head, and another shoulder. So we can also apply the rules that applies to trading head and shoulders. Of course, we know that once the neckline, this is the neckline, that once the neckline breaks, then price can always come back to retest the neckline and goes in the downward direction. So that's another confluence that we can add to what we are seeing. So we've seen the structure that we're trading, and we said that the rule that applies to this structure is that once price gets back into the zone, once price gets back into the zone, then we expect it to start coming downwards. And we can see that just when price got very close to the zone, there was a big rejection forming like a gravestone doji. So what do we do? Let's go to the daily time frame. So we can make it smaller, refine our zone. So we don't try to make whatever it is we are doing to try to make it make sense. No, some people would easily draw this downwards and then they try to, which is okay, but our initial point was up here and price hasn't gotten there. So if you now try to what will I call it now, to make it look like you are smart, you will end up losing your money. So we can see that the market is still in a downtrend. So price made a third touch of this trend line and started retracing downwards. But we said that our major focus is still this place. So we can see that there's another area here that this price is currently reacting to. But let me warn that most times when the market does this, it wants to bring a lot of people into the market. How? To take their money. Now, the market was moving upwards. We are saying that this is like the major zone. This is the neckline of the head and shoulder pattern that we saw was formed in the higher time frame. So I'll be more confident taking my trade from here than just taking it from the trend line. What do I mean? This is a very good area for liquidity grab in the sense that once the market gives an indication that it's likely to come downwards here, a lot of people are going to hop into this trade, and guess what? Their stop losses would be here. So the market can easily come back upwards, grab all the liquidity, come into the zone before beginning to head downwards. So what am I trying to say? Even if you are to sell from this zone, then you have to be what? Very, very careful. And then you know that you wouldn't be holding the trade for long. So if we are to take this out, so the question is, would you advise? Just like I said, that's what I would advise that you do. If you've jumped or taken any trade from this point, all well and good, but know that you're not going to be holding it for too long. You wouldn't be holding it for too long. For a lot of people so H4 is supposed to be my entry time frame. So if I were to look at this and say, oh, there's a change in trend, because like I said one of the things that would make me jump into the trade is if I place my counter trend line. Now this is perfect. This is perfect. So if I were to hop into this trade, this is my counter trend line from H4. It broke, retested, and now it's coming down. But because I didn't spot this on time, I can just put like a little, draw like um, a little resistance zone here. And once the market comes back into this, then you can hop in and then your stop loss would be somewhere here. But like I said, this wouldn't be a trade. This would be a trade I'll be monitoring very closely. And it wouldn't be something that I'll be looking to hold for a very long time. Why? Because there's another zone up here. This can easily reverse, come into this place, and then go downwards. So that will be that for crash 1000. But just like I did for the boom 1000, let's look at those that would want to take their trades from the lower time frame. That means that you would be working with like you'll be taking your direction and structure from the maybe the H4. Some people even do that with H1. So just like we did for the boom 1000, let's take all these out. So this is H4. And all we can see right now is that the market was in an uptrend, made a high, lower high, higher high. Sorry, this is a high, a higher low, a higher high. Now it is trying to make a low. It's trying to make like another higher low. But if we were to draw our support and resistance points, first of all, we can see that even though it's in an uptrend, we can see that the trend line has been broken. This for those now that would have been trading in the lower time frame. The trend line has been broken, and we can see that there is a resistance, a support point has just also been what? Been broken. So for those that are asking what's a support point, the rejection points, can see that price got into this point, was rejected, came downwards. It came back here, broke it, but was rejected again by this red with this red candle, like a fake breakout, was rejected, went back up, came back, was rejected again, and then now it has broken it. So now that it has broken it, we can say that we're in a what? Downtrend. Now, just like I said for boom 1000, you can see that the only disadvantage of starting your analysis from this time frame is that you do not know was what's in the higher time frame. You wouldn't know that something can happen here because you wouldn't suspect that there could be possible liquidity grab in this zone because there's another more powerful zone above it. But notwithstanding, let's continue with analyzing from H4. Now this has been the trend line has been broken. It has not just been broken, there has been like a retracement towards it to retest it. So there has been a trend line break and retest. Also, to give more confidence to jumping into the trade, the support zone has also been broken. It has not just been broken, there's a strong a strong bearish engulfing candle here. Strong bearish engulfing candle, and there's like a sort of retracement happening. So what I'll do, go to H1, giving us a clearer version of what we described in from H4. And all we now need to do is to wait for a proper retracement into this zone. So if price comes back here, I can easily hop into this trade with my stop loss just above this point. So like I said, this is a very good trade. It's still it will be a very good trade, but I'll be monitoring it closely and wouldn't be holding it for long. And if the trade can rally to this point before pulling upwards again, then this would be what? Massive profit. So let's quickly look at boom 500. So let me take all these out. So currently we can see that boom 500 boom 500 it's currently in a downtrend, uptrend. So let's see what happened here. So it was coming downwards, and I think there has been like a change of trend. So this was a low. It made a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then it made a higher high. Let me take this out. So this is the point it made a higher high in the sense that this lower low, first it made like a double top, but couldn't keep moving upwards, and then the downward trend line was broken. So we said that for a trend to completely change, it has to make it has to move, make like consecutive highs or consecutive lows depending on direction. So if a trend is changing from the downward to the upward, it has to make like consecutive highs in the upwards direction and vice versa. So in this case, the market changed here. In other words, the downward trend changed here because now we have like a high and then we have another what high. But currently, there's like a sea of red candles in the downwards direction, but the market is still in an uptrend in the sense that it has not broken this structure. The market will have to take out this structure for it to come down here, make a retracement, and continue in the downwards direction. So, merely looking at this, even in the monthly time frame, we can see that though the market is still in an uptrend, is at a very strong key point of interest. What do I mean? It simply means that for the past 1, 2, 3, 4, 5, 6, 7 months, the market has been moving downward. So if we should go to any other time frame now, we're likely to see that the market is in a downtrend. But the market has been moving downwards and has gotten to a very, very strong key point of interest in the sense that this was the resistance zone that it broke for it to begin its initial uptrend from where it is currently making its retracement. So the market now would either embark on another massive movement upwards, or it will break this current support and move downwards. So we'll now have to look for structures that are relating to whatever it is now that we're looking at. So we'll go to the weekly time frame. Now, on the weekly time frame, what structure are we going to be dealing with now? So I'll simply go on the line chart, and you can see that the market has just been simply making lows. Market has been moving massively downwards. Massively downwards. So if we are to look deeply at the line chart, we see like an M here, like an M faintly drawn. But because we are not so sure, one thing that we'll have to really pay attention to would be the candlestick pattern or chart pattern that forms at this very, very strong support zone. You can see that we're already having candlesticks like doji, which is telling us that this massive movement downwards is currently what is currently failing. It's currently, or the momentum downwards is gradually reducing. So we have to patiently wait for whatever happens. And some people can even see this as double bottom. Some people can even see this as double bottom. So there's a lot that can happen here. And if I go to the daily time frame, you see now that on the daily time frame, the market has gone into a range. So for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, for the past 13 days, the market has been what? Ranging. But still, this range, but if we were to look at it from here, our direction is still what? In the downtrend. So I'll go now to the H4 time frame. I'll go now to the H4 time frame. So we can see that the market is still in the downwards direction. Now remember what I said, that all you need to do to take your entry is the counter trend line. So now we can still see that even with our counter trend line, this was like a fake break of the trend line, and we can see like a massive red candle now coming back down, coming back down. So what will I do in this case? I would have to wait patiently. Wait patiently. If this H4 trend line is broken completely, and then there's like, it breaks completely, makes a retracement back to this line, then I can think of what? Taking my trade. And I'll take the trade looking at the trade closely to see how the market reacts when it gets here. I probably take some profits when the market gets here. But for now, I wouldn't engage in any action. I wouldn't take any action. I wouldn't advise anyone to trade in this area. You can see that the market is choppy because it is still trying to determine the direction that it will go next. Why will I say this? Because first of all, the market is in a very, very strong, market is at a very, very strong support zone. It will not make sense to be buying at support. So the only way, to be selling at support. So the only way you sell this market is, just like I said earlier, is if this happens, if there's a clear break out from the zone, a retracement, then you sell. But the only way also that you buy would be what I had shown in H4, is if there's a clear break of this counter trend line and then you buy. Let's look at H1 to see if we can refine anything. So you can see that it has made a mess of this trend line. It is currently coming back down inside. So that will be that for boom 500. So let's look at the last one, crash 500. Let me take this out. So crash 500 also, just like crash 1000, is in a massive downtrend that has been trending downwards for long. That's what we can actually get from the monthly time frame. This is a low, lower high, lower low, lower high, lower low. It's made a lower high. Now it ranged for months. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 months. So almost a year. In the whole of 2024, crash 500 was ranging, and then finally broke out in the 12th month, December 2024. It broke out, and that's what we have now. So let's see if we can get a structure to work with the weekly time frame. Let me take this out. Now, from the weekly time frame, you can see that the range has become a bit more prominent. Now, because the range has become prominent, sort of, we can now we can now try to map out where it broke out from, So this was our range. The market broke out from this place. So what structure can we work with here? Let me make this bigger, and then we can see that we have a W structure turned M structure. So what's the rule for trading M? Just the opposite of W. So if you have M structure, it's expected that price will come back to this point and continue downwards, or the M structure could be like this. This is like a resistance. Price could break through this resistance and form like a double top before what? Coming downwards. So in this case now, we can see that the M structure has just been formed and price has gone far downwards. We have like a sea of red candles here. So the downward trend is really, really strong. But however, we can see that also that there is a rejection. This like a rejection candle, which is an indication that the market is trying to push the price upwards. But the best place to engage this market, the best place would be if it can move gradually back into the zone, and then we'll be taking the best trade. It can even come into the zone and move even up to this point to form like a double top. And most times this is what happens where a lot of people are waiting here. The market will just move up a bit, take out your stop losses, and then continue downwards. So having seen the structure we're working with, let's see if we see it clearer in the daily time frame. So we can see here that there really isn't much to work with here. So all we have to do is make this a bit finer. And then see if the market can do like a retracement into the zone. Then we'll look forward our trades. So just like I said, all you need to do is to look for counter trend lines and then you take your trade. So for those that work with the lower time frame, let's see. So if we were to start this analysis from H4, we have simply had like our downtrend. And let's go to H1. And then we'll be having indication that the market wants to move upwards, which is what we said, that we'll look for a weak retracement upwards. But it's usually not advisable to buy a downtrending market, especially one that is trending very strongly downwards. So we can see that the market is trying to make its way upwards. So even those that go as far as the M30, you would see that the market is already embarking on a small up or a weak uptrend, but I wouldn't advise anybody to engage in this. So if you've enjoyed this session or you've gained anything at all from it, I would like to plead with you to click on the like button. You can share and subscribe. Like I said, I'm back and I'm going to be taking pairs from time to time to analyze. I'll try as much as possible in spite of my busy schedule to be consistent this time around. So please subscribe to my channel, share, especially if you love trading derive synthetic indices. So cheers.